So this seminar topic is how to trade news profitably. I picked the NFP because it is usually a big news, and usually it gives like 50 to 100 pips after the news is released. So let's see how the gurus trades, how the market gurus trade the news. So back in 2012, end of October, Bank of Japan announced more easing. So as the Bank of Japan announced more easing, as in in the States, they have the QE and buying bonds and making their more currency floating around the world. So in this case, it is normal that to know that as there's more currency around the world, this currency will become weaker. And by weaker, because this quote is USD JPY, so $1 can buy more Japanese yen, and going up for the USD JPY price means going weaker. So it is easy to spot that there's sometimes big news that trigger the move of the market. So Soros, knowing this, he told the media that since November he made some bet in the Japanese yen market and made 1 billion by February 2013. So it takes him 3 months to hold and buy and hold and earn his 1 billion in the Japanese yen back. So gurus trade like this, buy and hold for 3 months to make 1 billion. So how can we learn from this? So first we need to have the we need to find the theme of the market. So there's a lot of theme around the market there's always a lot of theme in the market. So as long as we can pick the correct theme, then we can make good money. So like the Bitcoin mania, Bitcoin has become more and more popular, and is recently made legalized by some countries and in the States. So it is become more and more legit, and so the price keep going up. So if we can spot that Bitcoin is going to becoming more legit, just like even 1 year ago, then we'll have great profit on this. And we are no short of examples like Brexit. We usually say BR exit here. Brexit. So it is not hard to imagine that the British pound will fall in value because it no longer in the same society with the EU European Union. So we are no short of examples of having a theme in being in the market. But there's always two questions to ask. If this we all know Bitcoin is going to rise, right? Even back in here, but we don't know when it will end. And if it is going to rise, when is a good price to enter? So we always want to enter, but we don't know if we will enter here or enter here or enter here or enter here. We are afraid that we enter here and then the market drop big time, and then the time ends and then the cycle finish and then it starts dropping. So we are always afraid of this. And so there is actually 3 elements that we need to know before any good trading. So price, turn, time turn, and underlying trend. Underlying trend is the theme that we talk about. Bitcoin mania become more legit. BR exit will British pound will become weaker because they leave the EU the European Union. And so we need, first thing, if we want a profit in news trading, we need to identify the underlying trend. The second is the price turn. So if the trend is going to continue, we need to find a good place to enter the market. And the third thing is the time turn. Time turn is if we want to enter the market and then it immediately continue the trend. So, and we need to know when the trend will end so that we will exit the market before the cycle turn down. But this is a $1 million question. So if we know that the answer to this question, we'll be so rich that we cannot imagine. So our next slide, I'll be sharing a tools that I can part of solve these 3 questions. So let's see this. This is the unique tool that I've developed. In the first slide, I said I've developed a unique tool which gives underlying trend, price turn, and time turn. It is not Fibonacci. It is not golden ratio. The time is up to the hour level. The price is up to the 10 pips level. So you can see the recent price turn, time turn. This is Euro chart, by the way. If you are trading Euro, this is the chart 2 days ago when I prepared the slide. You can see I already got this 1.1686 pressure here, and because these are the level that the market really is operating on, so you can see it always quick touch and then go back down. Quick touch, go back down, quick touch, go back down. So we can, not here, just here, quick touch, go back down. But at here, when we touch, when it is testing the level that we know there's a pressure, we can set some tight stop loss like 10 pips above, and then we can short sell it with a in a very good opportunity, high reward, low risk opportunity, which and then we'll be gaining like 8 reward to 1 risk level trades, and in this trade. And here, even if we stop out here, and then we can quickly make another short sale here with the stop loss here. So with the tools giving you some real levels that the market is reacting on, we can always set very close price, close stop loss, so that we can get a high reward and small risk opportunities. So the last 2 price signal is quite good, and let's see the time signal. Time turn, you see the time turn usually work quite well as well. The time turn up and down, up and down, up and down, up and down. And when you see the 2 time signal and price signal together, so this is the time signal to get back down, but the market tests the price pressure again, and then you got a more confirmed trend to go down. So WD Gann always said when time and price signal have signal together, you are more confirmed to trade it. And another time and price signal comes here. So you can see the time is about to go down, and then the market go to test its maximum limit again and then go down. So time, and then I expect to test for the price again and then go down. But let's go to the market, one quick view. So you see, this is the live market of the euro. You can see 1.1686. I did know the pressure was here before the NFP today actually made its price to 1.1686 and then go back down. So at that time, I did sell the euro and with a tight stop loss, and then I'm already pocketing around 50 pips. I'll later explain why it is a very good trade to do today, actually. So let's go back to the PowerPoint first. So having this time and price tool is very good, right? Easy for trading. But this is not the end of it. The good thing is that we can even more understand the market by layering with the traction trend line that I mentioned in my 56 page of ebook. So by traction trend line, it is a real trend line which can induce trading in the market and induce pressure and support level. So if you have not, I think some of you may have read the ebook already. If not, I'll recap it here. So by drawing traction trend lines, you need to find all the session high volume, which say this session high volume is here, this session high volume is here, and then this session high volume is here. So you have all the connected, all the session high volume, and then you try to get one line connect all. If not all dots, then you connect most of them, and then you get this traction trend line, and with the parallel line as the pressure. So you see it works quite well. That volume here, traction trend line support here, and then volume here, traction trend line pressure here. So this is a trend line that is sensitive to the market. The market, whenever the market crosses or touches this kind of traction trend line place, it creates, it induces trading somehow. And so when you have this layered traction trend line, you sort of know the euro market is going down, and you sort of understand the market more now. You can see we got the time turn here now by my unique tool that I introduced last slide, and then the market turned down. Why it does not turn a lot down? Because there's a traction trend line support. It goes up, another time turn down, and then it gets support for the traction trend line, and then go up, and then time turn, get down, go up, traction trend line pressure, go down, and go up, time turn, go down. So you sort of understand what the market is doing. Why the market did not go further? Because it was supported by the traction trend line. So you sort of understand what the market is doing. So you using the unique tool that I introduced 2 slides again before. So you got this sort of opportunities to trade. So A, B, C, D, E, F. You got like 1, 2, 3, 4, 5. You got 5 opportunities to trade. 6 opportunities to trade with the time rule. But will you trade all of them? No, I suggest we shouldn't trade all of them. Here, you can see it is near the bottom of the traction trend line. So even if the time rule, because the time rule is not perfect, no tools is perfect, but sometimes it will fail. If this time turn fails, then you might experience some loss here up to here, because the traction trend is it might up to here, and then your risk is this, but your reward is only this. It's one risk versus one reward. So this is not good. Same here at the time B. So it can go up and it can go down. But it is a totally different story for C, D, and E. So you know it is already, the market is already going to the limit of the traction trend line. It's just waiting for some news or something to trigger to go down. So the market, you should when you assess the risk, the reward risk ratio, the risk is just only like this. When it's go a lot more, you know you have something wrong, and then you can stop out. But the reward is like this. So the risk is like 1, the reward is like 6. So we should always choose some good reward to risk ratio to trade, and we should avoid this kind of opportunities which doesn't have good reward to risk ratio. So we should not engage in all opportunities that we think it is profitable. We should always assess that what is my potential reward and what is my potential risk. So we always pick this kind of place to sell. And this one, you see the time call did fail here. Going to back to the live market. This is the live market. The time call did fail, and then it was pressured by the price turn. And then you see the traction trend line here, right? So you got free confirmation that the market is going to go down. Should you take it? Yes, we should take it. Because why? Because the risk is very minimal. It's approaching the traction trend line pressure. It has a time turn call, but it failed. But it has a price turn call, and then the reward is a lot. Like there is like a 200-300 pips down the scale to have it profit ongoing profit for us. So let's go back. So it is a good trade. If you really want to trade, I suggest you make a stop loss at 1.686 and then trade here. Like you got 40 pips risk, but you are aiming for like 200-300 pips for reward. So I'll go back to here and see what happened by the end of seminar. So let's get back to the webinar. So you kind of understand what happened to the market, what they are doing, and what should you do in the market. So some traders come to me saying that, oh, trading is so time consuming. You know, I need to sit down in the market all the time and spot for good trading opportunities and then exit for good places. So actually, this unique tool allows you to spot, like, you know, it is becoming time for you to have good opportunities to trade here. But it is not good opportunity for you to trade here. So you don't need to monitor the market here. Just wait. The market will not be, say, goes from 1.205 to 1.1550 in like 2 days. It will always sit set to walk. And then it will always walk according to the settlement of the market. So if the settlement of the market is going down and there is not much opportunities for us, just leave the market. You don't have to trade every day. So you just wait for them to rebound, and then you trade on these opportunities. And then when say if we trade on these opportunities and then we get down, and then I teach people to slightly close your position and then go back up and then to back down. So even though after you have closed your position, slightly your position, even though if you go back up, then you won't be losing anything, even if it go back to your entry point, because you are still, you have closed part of your profit already. Yeah. So it is a very good way to trade, knowing that what the market will do, knowing the underlying market, knowing underlying trend, what it will do. So okay, so let's look at it. What happened is in the non-farm payroll today. So non-farm payroll today is, what I remember, is very weak. It's very weak, and then the US dollar is very weak, and then it have a jump from, this is 8:30. See the time below is 8:30, and then the data release, and then it go to test our 1.686, and then it feel the pressure and then go back down. So this today it gives us a very good opportunity. So should you trade on this economic data separately anymore? No, you should do it, put in the context, putting it to the context of its underlying trend, and put in the context of your reward risk ratio. In my opinion, this kind of non-farm payrolls, no matter it's non-farm payrolls or Fed fund decision or CPI or all this kind of news, is actually a trigger point. It always try, if for today is good, you wonder why, before you come to this seminar, you wonder why this will stop here and then go back down. You have a lot of questions why a bad data will not give a lot of rise in the euro and why it doesn't go much more. Why? Because you did not put it into the context. The context is the euro is falling and it has already did its best to test the price turn they allowed, but then they feel the pressure and they go back down. So never trade this kind of economic data solely again alone on its data. So you know, I use Forex Factory for reference. So you know there's a forecast and then you are actual. So usually if people haven't come to this seminar, they see, oh, it is weak data today, so euro must rise, and they will go into the euro market and buy. But then they will later find the market quickly go back down, and then they say, oh, it doesn't work. Why economic data release a bad euro day and then a bad USD day, but then euro doesn't rise? Why? Because they haven't put it into the context. They do not know the underlying trend, and they do not know this price turn. But we know, and then we take advantage of this kind of release. If today is if today the release is the non-farm payroll is the opposite, like if the market is go down, then I'll just ride on it, just like set a stop sale here 30 pips below when it released the data, and then ride on the fall. Why? Because my risk is very minimal, and then once the market have the news, it sort of move according to the news for a while. So it will not, if it is a very good non-farm payroll, then USD rise and then the euro fall, it won't it won't go back up and then go down. It won't. It just will go falling down because the underlying trend of the euro is go falling down. So this is what we should do for the non-farm payroll and all the economic release data. Is for my opinion, is just a trigger for the market to move, for the market to have quick move, and we should always put these kind of economic data back in the context. So this is the first part of the seminar. So I want to see if you guys have any questions. Feel free to type in the chat box. I can see there's a Q&A. I'm going to answer this. Can I watch the seminar? Okay. Actually, yeah, I'll answer it later. But try to get as much as now, because in the recording I may be added a bit and close down some good tips that only available to my live participants. So I'm going to open the chat box. Any questions so far? Q&A session for 2 minutes. I want to drink some water. Everyone is with me. Say hi in the chat box, even if you don't have questions. Okay, good. So far, no questions. So is it a eye-opening session for you? Give some comments so that I can adjust in the. Or is it very basic that you know it already? Or just give some comments so that I can adjust in the following talk. Because this is only the part one, and I still have part two and part three for you guys. Okay. Because we have all sort of participants here. Some may know Gann already, or some just use technical indicators to trade. So I just want to make sure everyone is on the same page. But I'll try to get quicker. So not much other questions, right? So I'll go to the session 2 now. So session 2 is about how to enter and exit the market with no hesitation. I will share some of my trading experience and my twists and my tips on how to do this, enter and exit the market with no hesitation. So I said before, you might bought courses from the other teachers that they taught tools that you might not be able to apply in the market, and most likely it is because they do not trade in the market, so they do not understand what is instead going on in our mind. And I have some twist or some good trading mindset that I want to share with you so that you can improve the way that you think when you are trading. So I've said there's plenty of opportunities around every day. So you got many news every day, and then you can sort of try to figure out if it is the underlying theme of the market. Actually, each market has a theme to unfold. Always try to locate that theme, and then you understand what the market is doing. Say this is the gold market. So you might have, with the new Fed chairman just chosen 2 days ago. So you might have think this will be a new theme of the gold market. So on consensus, in 2018 there will be 3 interest rate hike. So if the new Fed chairman decided to raise the interest rate more quickly, the gold market should drop. And then if they want to raise hike less than 3 times, the gold market should go up. So once you enter the market, say no matter you are buying or selling the market, I always use this kind of news to confirm if my understanding of the underlying theme of the market is correct. Say if I think the upcoming theme is like this, I will always check for the hints of the market from the reaction of the market to the economic data release. Say for CPI, the Consumer Price Index. Say if it has a high inflation data, then the market the Fed will tend to rise the interest rate quicker because they don't want inflation. So one day, if the CPI is very strong, like 4% inflation, but the market didn't fall, you have some sort of you can take analogy that what we did in the euro. So there is a very strong data. Wow, you see the euro is falling like hell. There's a very weak NFP, but the euro doesn't rise. So there must be something happen else. Since there's something else happening, there's a shadow that we cannot see. Maybe maybe euro is going to buy and is continue to buy a lot of bond, and there's a lot of insider who knows, so they are keep short selling the market, and then whenever they see there's a good place, they short sell the market. So when you see the market is not reacting the way that you think, you should always exit the market. So if the CPI is very strong and the market did not fall or did not fall enough, and then even though or maybe even if it rise, then you know there is something wrong with your view. Your interest rate hike theme is not right in the gold market. So you should think of another thing to spot the underlying trend. So there's a magic word actually. Whenever you see Bloomberg, Reuters, you see the word "shock off." This is a magic word. You should always do the follow the recent market movement. If you see this word "shock off," this is telling you that no matter what is this, you see, I just say XYZ, whatever it is. This is telling you that this is the underlying theme. So whenever you see the shock off, you just go into the market and then bullish bets, so just buy. And then you see here, it got like 300 pips in 1 month. Same for here. Japanese yen decline as trader shock off, blah, 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 XYZ. So decline, what is decline in USD JPY is going up, right? So you can see after half a year, it goes weak a lot, because this is the underlying thing. So this is the very easy tools that Agnes in the beginning talk about. Whenever you see the shock off, this is the theme, underlying theme of the market, and then you should treat this as the underlying theme, and then you just need to find price term and time term to get into the market. So this I used to Google search on Reuters and Bloomberg every day to search for this shock off word, and then whenever I see the market there's an article on this, then I rush and then buy the market. Sometimes it's stock, sometimes it's oil, but like 90% it is correct. So it's a very good tool, very easy to apply, and everyone can do it. Just you need to search and then pay attention to read more news. So I thought the second thing is that how you can enter and exit the market more confidently. So you assess the reward risk ratio. So I always try to trade only the high reward, low risk opportunities, so that I will avoid to trade A and B, but trade C, D, E, so that if there's anything wrong, I still can close it, but it worth the loss that I made. But I have two more elements on this. One thing I assess the reward risk opportunity. The other two thing I assess is the psychology pressure, and with also the given up social time. So I think everyone must have this experience. Say your friend come nearby and then call you up and then say, hey, let's go out have a dinner, and then you might be having a trade here, sold here, and then it's the time when you pick up the call is here, and then you want to go to the dinner, but oops, the market doesn't allow me to do it yet, and I will be anxious if I see this, and then I will say, I would like to go, but this make some excuse, and then turn down your friend. So I'll put this in consideration too. Giving up social time and psychology pressure. Say if I want to go against the theme of the market, say I want to long the market, it must be very good reward to risk ratio. Like at here, I will do the risk because if you go against the theme, the theme of the trend, the later that you close your position, the worst price you will get. So if you wait, you can get a better price. It is normal that you want to wait when you are on a losing trade. But if you doing opposite of the theme of the market, then you will have worse price for you to close if you wait longer. So if I want to do the opposite of the theme, I need to have very, very high reward to risk ratio in order to do it. So considering the so I interchange with the reward risk ratio. I need to have a very high reward risk ratio in order to have given up my social time gathering and bear my heavy psychology pressure. So this is how and also if we are here, then I'll wait the market until I got some good market in the good opportunities to trade, so that I don't need to waste time monitoring the market all the time. So I know even I have this sort of thinking. I know a lot of traders said, oh, I did a lot of analysis on this trade. I don't want to miss this. And I bet so much capital on this move. I don't want to stop out. And I do not want to lose the upcoming opportunity to make money. So I have to always stay close to the market to spot opportunities. So I'm going to share, this is the real trades that I suggest in my signal service. I made 2, 3, 4, 5 trades. I start calling the euro weakness back in July 25th, which is way ahead the actual weakness. So you can see that because my unique tool allow me to set effective stop loss. What I meant by effective stop loss is once I set a stop loss, if it is going to break, it will go to a high price and allow me, if I'm going to sell. So it breaks and then it will allow me a better price to sell again. So this is effective because it saved my losing, and then I can re-establish my position here. But if I hit the stop loss and then the market go back down, I will call it ineffective because it actually make my position worse. It stop out a good trade and then it drop, and then I will be so angry that I am stopped out and the market does continue the way that I thought I would have. So in July 27, I set a short euro at blah 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 stop loss here at this price level. So it did stop out, and then but the market did give a high price for me to short sell again. So another time I see opportunities, I sell, but with stop loss here, and they hit again. So normal traders will say, oh, you got so many stop loss is not good, and then but do you know that I am improving my position? See, when I because the stop loss is effective, so the market keep going up, and then I get a better price doing the same thing. I improve my position. I was selling here, and selling here. Actually, I saved my losses here. So I actually get better position by being stopped out. As long as the stop loss place is effective, we should always do a stop out. Actually, you will later see my trades. Most of them is being stopped out, but I can still profit from it. Why? And I'll explain it later. So in the last one that I sell here again. I improved my trade every time. I get a better selling price every time, despite the stop being stopped. And then I set a stop loss here, but it wasn't hit. And then boom, it fall to here, and you can see my closing price is even higher than my initial sell. So how can I profit 24 pips from selling in a rising market and still be able to profit? So definitely, I got a very wrong forecast. I was calling the euro weakness too early, but this effective stop loss skill helped me to protect myself. So I survived this wrong forecast. As a trader, it is very normal to have wrong forecasts, and on and go. If you can limit your losses on your wrong forecast and ride on the right forecast, then in the long run you will get profits. So by setting effective stop loss, I actually improve my position and even get profit for prices higher than my initial entry. So do not afraid by stopping out as long as your stop are effective. So these are some experience that I want to share with you to have a better mindset